Everyone. So in this video, I'll try to analyze what's happening in the small cap index and probably be prepared for what is going to come in the next few months or few quarters. Okay, so this is the small cap index chart, the weekly chart that is. So if you look at the current price, that is today's closing, we are exactly at the same level that we hit somewhere in January of 2018, right? Just before the budget of 2018, in which the long-term capital gains were introduced for the first time. And then after that, the market saw, I mean, especially the small and mid cap saw a pretty huge decline. And then what happened was the SAB came out with more stricter regulations, which made most of these mutual fund guys sell the small and mid caps. That again led to a lot of pressure, and as well as the interest rates from 6 it started moving up to 6.5, which also hampered the demand, which led to a pretty huge, I would say almost 50% kind of a correction in the small cap index, right? So now what is happening is, in the last 5 years, I mean, if you look at this previous top, we are exactly at the same level. So that means the small cap index for the last 5 years has given absolute returns of 0%, right? But good stocks have done pretty well. They are up by almost 100% and stuff like that. So in this current decline, right? So this rally started from after the COVID thing. So it went up to Jan of 2022, and the major decline started from here in April of 22, when the RBI went ahead and started doing rate hikes. Mm. After that, we kind of bounce, and to be honest, the chart right now is not looking that great. We have kind of made a double top. In case this neckline is broken, chances are we might go lower to 8,000 levels once again, and see from there, if things start improving, then we might start to reverse from there. As of now, the volumes in the small cap index or in the broader market is not that encouraging, and if any negative stuff is there in the budget regarding to LTCG or short-term capital gains, chances are that the market might have a knee-jerk reaction. So as long as this 30 WMA is holding on, we might be sure that okay, we might not really go down much. But if this is taken out as well as the neckline is taken out, then definitely there would be a knee jerk reaction, and chances are we might hit the 8,000 mark as well, right? So as of now, it looks a little dicey, especially going into the budget, and the big guys are not really showing any signs of accumulation in the broader market. So it's better to be on the sidelines and kind of be in that wait and watch mode. Now coming to what the RBI is guiding, right? So RBI in their latest meeting in December 22, they increased the repo by again 35 basis point. It is now at 6.25, and they lowered the GDP growth. So what happens is, as you keep on increasing rate hikes, right? I mean, doing rate hikes and increasing the rates, the growth starts to cool off, right? So what is happening is, so why do we have inflation right now? It is more of a supply led thing, right? As well as the demand is quite okay, which is causing crazy inflation levels, right? So the supply side, we can't do much about it as long as this Russia Ukraine nonsense is happening. So the central banks all over the world, what they are trying to do is, they are trying to lower the demand. So because of which the interest rates are continuously moving up, and that is slowly starting to have a negative effect on the economy. That is, the demand is continuously losing steam. So there might come a situation when, let's say, if RBI does another two rate hikes, that is go to 6.25 or 6.75, chances are there might be one knee jerk reaction which will form the bottom for this particular market, and after which the RBI might stop their rate hikes, and then the demand would slowly start increasing if they start to cut interest rates and things like that. So that would be the start of the next bull market after this panic or this knee jerk reaction. All right. So even the inflation expectation, these guys are projecting that inflation is going to cool off to 5.5% in the coming next 2-3 quarters. So basically they are killing demand as of now to cool off the inflation. And even Fed said that their terminal rates might be 5%. So if terminal rates are 5%, chances are we might go to that 6.75 or 6.5%. So another one or two rate hikes seem to be coming in over the next couple of meetings, right? So as of now, for the small cap investor, things don't look that great unless there is a thing in the budget which is positive for the small cap guys. Let's say they take off the long term capital gains and things like that, but that is highly doubtful as of now. And even if you compare the small cap index with the nifty, right, it has been underperforming. So it's better to stay on the sidelines and wait for a clear direction, and then maybe we can bet big once we are sure that the next bull run is starting. Hope this helps. Thank you.